Well, hello. We are back and we're joined here with Josh again. And so, because we know what's coming next week or soon to be, we got this rate announcement. We thought we would get together. Let's talk about what is going on with the Bank of Canada and the rates. So, Josh, welcome. Thanks for coming. I guess the first question that everybody has is like, what's going on with the Bank of Canada's rate cuts? Are they going to drop? Where are they going? What's actually happening?
Well, like the last two rate announcements in June and also in April, there's a lot of thought among people that rates would drop, and the Bank of Canada did not drop on either of them. The next announcement date is at the end of the month here in July, and we're probably not going to see another rate drop in July either. So even though people think it's been going to drop, now all of a sudden with some uncertainty, a little bit more inflation, and who knows what's going on with the United States and that impact on interest rates, we just don't know. Royal Bank recently came out and they've changed their forecast, and they've told us that they don't think there's going to be any more rate drops. So the Bank of Canada rate is 2.75, prime's a bit higher. Variable rates can be had around 4% right now. And they're saying don't expect any more rate cuts. However, there's six big banks in Canada. We have five of them really in Alberta. And most of the other ones are still thinking there will be a 0.5% rate cut. And between later in the year this year and the middle of the year next year. So not super fast, but over the coming year, probably a 0.5% rate cut is not unreasonable to expect.
Gotcha. Okay. So I guess the question really is like, have we seen fixed rates do what they thought they were going to do this year? Should they have come down more? Did they come down too much? Like, where are fixed rates then as a result of these bank announcements?
And that's a funny one, Jake, because fixed rates, once the Bank of Canada started dropping its interest rate, we didn't see nearly as much in the way of fixed interest rate drops. But the difference is fixed interest rates largely dropped prior to the Bank of Canada doing its rate drops. So when the fixed rates hit their peak, that was close to a 6% interest rate. And when they hit a recent low before recently bumping up just a little bit, they were closer to 4%. So we saw almost a 2% rate cut. And that's actually only a little bit less than the 2.25% that we've already seen from the Bank of Canada. Now, National Bank, who isn't super big here in Alberta, but their forecast based on previous what they call easing cycles, which is interest rate drop cycles, they think that there's still another almost 0.5% left for fixed interest rates to drop. So where that leaves us is, if they're right, we'll end up seeing fixed interest rates between 3.5% and 4% whenever the rate drops that are still going to happen end up happening.
Gotcha. Kind of a hard thing then for buyers that are coming in with a new mortgage. Like, how or what should we do? Like, do you have advice for them? Like, what should they get at?
Absolutely, right? A lot of people want to be like, okay, if interest rates are going to drop, I'm going to save thousands of dollars on my new home. However, that does come with the problem of what's going to be the difference in the prices of the home. And there's certainly some uncertainty. I think you might talk a little bit later about the GST rebate on new builds for first-time home buyers. In Edmonton, we've been seeing a little bit of market value increase throughout the year. Calgary's been a little bit more stable as far as Alberta is concerned. But, if home prices go up 4 or 5% while you're waiting for interest rates to drop a 0.5%, you're going to end up paying 20 or so more $1,000 on the home than you would by just buying it a little bit higher rate. And of course, there are strategies. Maybe you look at a variable rate if you can handle a little bit of interest rate risk. And that could help you to take advantage of some future rate drops as well.
Yeah, makes sense for sure. Totally. Yeah.
Right. So, Jay, there's obviously that uncertainty, but when you're talking to buyers, what kind of advice are you giving them when they're concerned about the market compared to interest rates?
Yeah, there's a lot of question actually. Like, should we wait for the interest rate to drop? That's been this thing we've been wrestling with for the last couple of years. And I know every one of our buyers, it seems like even when we're doing follow up, talking to them a year after they moved in, they're like, man, I'm glad we bought when we did. We might have paid a bit more in interest, but the home values have definitely changed. So one thing we're seeing is there's lower amount of inventory that we're getting from our builders. There's a quick turnaround. We have very low inventory still. We're still definitely in a seller's market. So I think if we're waiting, holding back, it's not going to be helpful. the GST rebate, all of that stuff that's coming into play here as well has introduced a few more people into the market. So I think we're going to see an increase of buyer pressure. We're going to see some lower inventory as well. So I personally wouldn't wait. I would talk with you, Josh, and say, like, what's the strategy to buy now? Can we do something with our mortgage so that if and when interest rate drops, we can lock in at that time? So that's what I would say. Talk to you, get some good mortgage advice, and let's go out and try and find your new home.
Awesome. Thanks, Jay. It's been great talking to you about this. If you like this type of content, make sure you click on like for the video, subscribe to the channel, hit that bell for notifications. We're going to keep trying to bring this type of information to you every single week, and we look forward to chatting with you. Our contact information is in the video description.